Hi, my name is Aziz, a fellow of the Association of Chartered Certified Accountants, ACCA. Welcome to part 4A of the course Bookkeeping up to Final Accounts. Today's topics are code creation, that is accounts or nominal ledger codes, pre-trading expenditure, that is expenditure incurred before you start trading, pre-registration VAT, that is the VAT that you have incurred on the goods or services supplied to you before you register for VAT with HMRC. Now, the last item is how subsidiary ledgers, that is sales ledgers and purchase ledgers, are connected to the nominal ledger, so that when transactions are posted to those two subsidiary ledgers, the nominal ledger is also instantly updated. Now, let me begin with code creation. As pointed out earlier on, the finance manager of our fictitious limited company is the one who is authorized to create account codes, because for orderliness to prevail, creation of account codes must be strictly controlled. Therefore, the finance manager is the only one who can create account codes, and that has been abundantly made clear in the company's internal control policy. Now, the control policy reads in part: this table of codes must always be used as a guide when creating nominal ledger codes. Nominal ledger codes must be created within appropriate ranges for ease of transaction identification and reporting. Only the finance manager or head of finance is authorized to create codes. So, what this implies is that whoever wants to create a code for any transaction must formally approach the finance manager for this task to be performed. He or she will then create the required code within the appropriate range. Look at the ranges demonstrated here under each account type. Under asset account type, you also have fixed assets. For fixed assets, code can be created anything from 1,000 to 1,005. Current assets codes can be created anywhere between 1,501 to 1,999, and so on and so forth. Equity and so on. So, I'm putting myself in the position of the company's head of finance, set up the company's chart of accounts. So, and I will show you what has happened here. Now, look at leasehold land. The code is 1,000, and that falls exactly within the fixed asset range of 1,000 to 1,005. Look at the account code or nominal ledger code for leasehold building, which is 1,010. It falls within the range 1,000 to 1,005. Look at the last code, for instance, on the fixed asset side, which is cumulative depreciation website development costs, 1,150, which falls exactly within the range of 1,000 to 1,005. Now, on the current asset side, I have also created codes. These are stock items. Small tools, the code for that, or the nominal ledger code for that, is 1,501, which falls within the range 1,501 to 1,999, and so on and so forth. If you look at income, the code range is 4,000 to 4,000 999. Now, the income code that I've created here is 4,000 for sales, General Motor Servicing. Income from sales, General Motor Servicing. That again falls within the range 4,000 to 4,999. Expenditure codes they also have their own ranges, prime costs, support costs, etc., etc. Now, I have maintained the creation of codes within appropriate ranges, so that my trial balance and the nominal ledger will look tidy and easy to follow or easy to read. Now, the codes, I am also going to demonstrate how the subsidiary ledgers connect, how they are linked with the nominal ledger. First of all, let me talk about pre-trading expenditure. Now, when the business was set up, certain costs were incurred. Without those costs, the business will not be able to function. If you remember, the business entered into a lease agreement with the council. Now, also, the owner of the business, that is Mr. Joe Bloggs, put some of his money, the money that he had withdrawn from his pension pot, into the business as a loan, and some of that money was used to adapt the building that was leased from the council for business purposes. Because when the building was leased from the council, it was not in a state that was fit for use as a motor garage, motor servicing for motor servicing purposes. So they hired builders and architects, and those builders and architects worked. They adapted the building, they partitioned the building, and the cost came to, including VAT, came to £4,800. Now, the business itself did not actually start operating until 2000, but all these costs were incurred in 2017, as you can see. Look at the various invoices here. Now, these costs are business costs. But because this company is liable to payment of corporation tax, it must pay corporation tax to HMRC. Now, HMRC has therefore been generous by saying that expenditure incurred within 7 years before businesses commence can be treated as legitimate business expenses, provided they are of the type that would be allowed if trade had commenced at the time they were incurred. Therefore, even though these expenditures were incurred in 2017 and the business did not commence until April 2020, this expenditure will be deemed to have occurred on the first day of trading in compliance with Income and Corporation Taxes Act. So I am now going to give expenditure code to all these invoices. In other words, I'm going to describe them in the nominal ledger so that they can be posted into the nominal ledger. Now, look at them, for instance. Look at them. The first item on the list is design of workshop layout. Design of workshop layout. These costs fall under what I call leasehold building enhancement, because when the company adapted the building from the way it was when they hired it and when they leased it from the council to the way it should be for business purposes, that is called enhancement. That is a capital expenditure. Capital in the sense that that enhanced part of the building is going to generate income for the company for the foreseeable future. For many years. Now, the code for enhancement expenditure which is a fixed asset, is building enhancement is 1,020, which falls right in the range of fixed asset 1,000 to 1,005. So because of that, I'm now going to give it nominal ledger code 1,020. Yes, which is a building enhancement 1,020. 1020. Now, this cost, the total including VAT is 10,000. The VAT element is 2,000. This is a new company, and the cost was incurred on the 1st of June 2017, when the business did not even have a VAT registration number. Has not registered for VAT. But again, the VAT Act says that you can register for VAT before you engage in vatable activities, provided you can convince HMRC that you intend to make vatable supplies in the near future. So, Joe Blocks Auto Services Limited is as registered as an intending trader, and on the assumption that the application will be successful, it can now reclaim VAT that it has been charged on business expenses. So if you have reclaimed, or if you can reclaim VAT on an item of expenditure, then only the net amount excluding VAT can be called your business expenditure. The VAT is reclaimable, so you are going to only take the net amount. So in this case, I am simply going to capitalize £8,000. Now, when I say capitalize, I mean I'm going to treat as a capital expenditure that item. That's what I mean. Accountants call it capitalized. They say when accountants decide to call something a capital expenditure, they call it capitalized. They say they have capitalized it. But when they decide that an expenditure is just an ordinary, it's not going to be a capital expenditure, they will say they have expensed it. So, application fee for planning application fee, which we received, the invoice of the cost which we have been charged by billing to local authority, is going to be capitalized as well. It's going to be capitalized because it is, shall I say, it is to be expensed. Sorry. So I'm going to expense that because, that is to be expensed. And I'm going to give it another code, which is I could call it I could just call it maintenance or sundry expenses. I could just call it sundry expenses. So I'll call it sundry expenses. Don't forget that what you do at this stage in the normal course of transaction posting will be reviewed later, maybe when your auditors arrive and they look at what has happened. They may agree or disagree with what has happened. This is where adjustment gets made at the close of, at the month end or year end. Now, my own decision is to expense this item. The auditors may arrive and say, look, I don't agree with this, therefore, can you move this out from expense to capital? But my own decision is to expense it. So, let's move on. Now, this next item is site clearance fee. Now, we were billed for site clearance again on the 10th of July 2017 by this company, Open Eye Construction Limited. Again, there is a VAT element, and we are going to reclaim this VAT. The VAT at 20% is £1,000. Yes? Now, this VAT is reclaimable. Therefore, only the net amount will be treated as a business expense. Again, This is going to be capitalized. It's going to be capitalized. And the code will come under enhancement expenditure. Enhancement, which is 1020. Construction. This is the real cost itself of constructing the building or adapting the building. Construction or adaptation cost. The total cost, including VAT, is £25,000. But VAT, because the VAT is reclaimable, I am only going to capitalize £20,000. That is, treat £20,000 as a capital expenditure. So that's £20,000. And again, I will give you the code 1020, which is the code for enhancement expenditure. Now, on the day the building was declared open, the building was declared open by the mayor of Billington, Billington Borough. Everybody was invited, press photographers, etc., to say, oh, we are very happy we've got this new business in this area. So people came, and the local sandwich bar, Wheatland Baker, was asked to supply sandwiches, the total of which came to £300. This business expense, this is going to be expensed. It's not of capital nature. I am going to call it entertainment. Okay, I'm going to call it entertainment. So I will expense it. Now, what is the code for entertainment? Or called sundry expenses. I put under sundry expenses, which is 6255. Now, I will show you where the range that comes from, 6255. Now, that code 6255 for sundry expenditure. If I go back to my expenditure, my 6255, it falls within support cost, which is range 6,201 to 6,900. So that has been done. So now, website development costs. The company developed its website, and there are various components of the costs. You have feasibility study, you have hardware and software development, hardware and software specification. Now, the cost of feasibility, because it's just the cost was incurred just to find out if it would be possible or not to do the website. So that cost is an initial cost, and therefore it's going to be expensed. So I am going to expense that cost. Okay, I will expense it, and because the VAT is reclaimable, I'm only going to expense the net amount. So which code shall I give this amount that I've decided to expense? I could call it now let me go to my chart of accounts for the appropriate code. Sundry expenses, interest, leases, etc., no. Insurance, no. General office expenses, no. I could call it printing, postage, and stationery, no. That's totally irrelevant. So I am going to call it, let me just try and look for the right code. Again, this is a matter of judgment, really. There are no right and wrong ways of coding transactions. At the end of the year, as long as you present your information to management and what you have coded is properly documented and defensible, really. So, but again, auditors may agree or disagree with what you have done. And again, if they do disagree, I mean, it's not as if you have committed any fraud. If they do disagree, they can say, okay, treat it like this, treat it like that, move it from this code to that code, which is part of what people do at the end of the year. So I could call it sundry expenses, okay, 6255. Yeah, sundry expenses. And put it under sundry expenses, feasibility study. I could call it that. So now, hardware and software development, as hardware and software specification. Yeah, again, I am going to expense. I'm going to expense that. I could call it sundry office expenses. If I go, yeah, sundry expenses, interest. Yeah, just look for the right code and give general. I could call it sundry general office expenses. Now, 6340. 6340. Yeah. 6340, that is again, only the net amount will be expensed. Yeah. Preference selection. That is when we choose. Oh, we don't want this. We don't like this layout. Okay, this is what we want. This is how we want it presented. Again, that is expensed. That is expensed, and only the net amount will be expensed on this occasion. Now, I'm coding transaction. I have not actually started posting transaction. I am coding them at this stage. Only coding them, describing them in order to decide what I'm going to do with them later on. So I'm coding them now. See, the next item is obtaining domain. I mean, you all know what domain name, something that will host the website. So we need to get a name for that, and the cost, according to Smart Guide Computers, the person who did the website for them, is the total cost including VAT, £600. That I'm going to capitalize. Okay, I'm going to capitalize that. So again, only the net amount will be capitalized, and the code for that will come under website development, which is a fixed asset. Now, website development cost. If I go back to that, the code for that is website development. Yeah, 1070 is the code for that. 1070, and it's right within my range of fixed asset, 1005 to 1500. So 1070 website development. Website development. Develop operating system and application code. Now, again, that I am going to capitalize under website development costs, and the code for that, and only the net amount will be capitalized, because the VAT is reclaimable. Installation of developed applications, that again will be capitalized. The code is 1070. The next item is stress testing. Again, that will be capitalized. Right? Capitalized. Design web page layout. We are designing the cost of designing web page layout is £1,000 inclusive of VAT, £800 exclusive of VAT. Only the net amount will be capitalized. So capitalize 1070. Yeah, that is website development cost. Creating graphic files. The cost of that is £400. £500 inclusive of VAT. Net amount £400. Capitalize the net amount because the VAT is reclaimable. Right. So now the next amount is registering with search engines. The cost of that is £800 inclusive of VAT, £640 exclusive of VAT. Capitalize the net amount because the VAT is reclaimable. Now 1070. Now training employees on how to use the website. You have to train your employees how to use the website. That is knowledge transfer. All consultants do that. Consultants don't just walk away after installing a software. They produce what they call user manual, and they do knowledge transfer. They do unit testing. This I'm actually borrowing from my knowledge of from my experience of SAP configuration. So they do stress testing, they do unit testing, they do knowledge transfer. That is when training takes place, user acceptance test, and so on and so forth. Now, the training employees have been trained, knowledge transfer, the cost of that is going to be expensed. So it's not capital, it's going to be expensed. I could call it, let me just see if I can find staff training there. If you are created a goal for staff training. Okay, now staff training. If I can have a code for that, I will put it there. This is the chart of accounts I'm going through. Now, staff training. See if I can find staff training somewhere. Now, there isn't one just yet. Now, these are not set in stone. Codes can be created. As you can see, I can create one later on. But meanwhile, I'm going to put it under general office expenses. But the ideal place for it is staff training, which can be created later on. So these are not set in stones. I'm going to call general office expenses. So general office expenses. Yeah. Again, only the net amount will be capital. Will be expensed. I'm going to expense £720, which is net amount, not the whole of £900 because that includes VAT, and the VAT, like I said before, is reclaimable. So I have coded the capital transactions for now. The lease transactions will be coded later on, and I will demonstrate how that is to be done and how when we get to the transaction posting stage. Now, the next item I would like to show you are the codes that I've created, the link between the subsidiary ledgers. One of the subsidiary ledgers we have here is the sales ledger. Now, the subsidiary ledger, which is the sales ledger control account, the sales ledger. The sales ledger contains the accounts for every one of our customers, the customers for the business. Now, as you can see, what you have up here, you have the master record for every customer, the name, the address, the telephone number, email address, and look at the credit limit. We're giving each customer a credit limit of £6,000. What that translates into is that the customer is allowed to owe up to £6,000, to buy things up to buy things from the company up to £6,000 on credit. And when that balance, that limit is reached, the customer is then urged to bring their balance to within the £6,000 limit before we can supply more goods to them. Now, for invoice chasing purposes, we have a contact person. The name is Mr. Daniel Owens. That is the person we call whenever an invoice appears not to have been paid for a very long time. Now, this brings me back to what I was actually, the link. Here is the link. This nominal ledger code of 1600 is the sales ledger control account or the reconciliation account. Now, the reconciliation account, sales ledger control account, is a collection of the total amount owed by debtors. That is what will appear on your trial balance. That is what is in the nominal ledger, and that is the code I've given it. It's a current asset. Now, if you look at the account code, 1600 actually falls within the range 1501 to 1999. That code has been created. So the translation is this. Whenever an invoice is posted into the sales ledger, the balance of that invoice will automatically reflect in the sales ledger control account in the nominal ledger, because this subsidiary ledger sits outside of the nominal ledger, but they are linked so that the two ledgers can communicate and give us the same result whenever they are interrogated. So, now look at the layout of the sales ledger itself. Typically, you have a column for date, you have particulars, reference, invoice number, then the debit item and the credit side and the debit side, and then of course another column for the cumulative balance, that is the amount owed by the customer to date on their account. Right. If I move from there and go to the purchase ledger, which is another subsidiary ledger. Now, the purchase ledger is this. Again, it's a collection of it's a collection of records of the customers, master records. On each supplier's account, you have their name, the address, and the telephone number, the email address, the VAT registration number. It is extremely important that this VAT registration number is verified for genuineness. Because this is the VAT registration number that the supplier will be quoted when they send us invoices. And it will not be very nice for this number to be used to charge us VAT that we cannot reclaim because the number is not genuine. HMRs will not allow anybody to reclaim VAT that they have been charged on the basis of bogus VAT registration number. So it is extremely important that as soon as you get hold of this number, you verify it, make sure it is genuine, because your supplier will tell you that this is their registration number, and that's what we put on all the invoices they send to you. And again, look at the next item, which is £4,000. That is the credit limit our supplier has given us. We are allowed to owe them up to £4,000, buy things from them on credit up to £4,000 before they start chasing us. Now, the contact person in the organization, the name is Mr. Alexander Jones. Now, Mr. Alexander Jones is the person we get in touch with if we receive an invoice that we believe contains inaccurate information or if we need to return goods to them that they have supplied, we are not happy with what we supplied, therefore, please take your goods back or give us a credit note or supply better ones. Now, the nominal ledger code is what I'm actually particular about. This nominal ledger code is the trade creditors control account, which I've put here. That is the link, it's a reconciliation account. That is what links this subsidiary ledger to the nominal ledger, so that when invoices are put here, the nominal ledger will be instantly updated. The end result of that is that the balances on the subsidiary ledger, which is the purchase ledger control account, will always agree with the balance on the nominal ledger. If you look at that £2,000 nominal ledger code, you will see that it falls within, because the purchase ledger control account is a current liability, because that is what we owe the supplier, which is payable within a very short time. So it's a current liability. Look at the account range. Code for current liability can be created within account range 2,000 to 2,500 to 2,500. So that way you will never go wrong, and your trial balance will always balance. Your nominal ledger will then be very, very tidy. So I will stop here on the now it's in the next video. I will do transaction posting. I'll show you, demonstrate the double entry bookkeeping and the importance of always making sure that your trial balance balances before you move on. So to receive the next, to always get an update, please like, share, and subscribe. And thank you very much for viewing. And I shall see you later on. Take care. Bye-bye.